to the end of the year, but are you financially ready for retirement? And is now the time to shape your financial mindset, maybe do a reset, so to speak. Marshall Clay is a financial expert with the Welch Group. He joined us now to talk about that and a little bit more. Good to see you this morning.
Hey, good to see you.
Yeah, so for folks who are close to retirement, well, they probably are pretty close to knowing what their game plan is. But for anybody who hasn't been watching their 401k, they kind of need this reset, don't they?
That's right, and I think that's what we were talking about off camera, that I was talking with somebody last week and they said, look, I've done a great job. I've dutifully saved into my 401k, but I haven't really watched it for the last 10 or 15 years. I've just been putting it in, just been watching it grow, thankfully. But now that I'm on the verge of retirement, I'm thinking about, possibly needing to pull money out from the 401k. How should I think about this? Right, so I think that's the paradigm shift. And I think, I told them to take a step back and look at the purpose, or reevaluate the purpose of investing. The purpose of investing is not to beat an index, whether it be the S&P 500 or the NASDAQ. That's not the purpose. The purpose is to grow your savings at a rate that allows you to keep pace with inflation, hopefully stay ahead of inflation, and then also to provide a stream of income for the balance of your life. And so when you think about the purpose of investing in those terms relative to just keeping up with an index, it allows you to sort of rethink and shape your portfolio in the appropriate way.
All right, I know for some of you who may not have a 401k or are involved in your financial planning, you may not know all of what Marshall's talking about, but you would understand what you need to prioritize.
That's right, and I think you got to prioritize capital preservation, so wrapping your arms around, playing a little bit more defense, as opposed to taking big flyers, taking big risk, and trying to grow your capital. And I always tell folks, dislike losing money more than you like making money when you get in retirement. That's a very good mantra, and build your portfolios around your time horizon. So if you're 6 to 12 months away from retirement and you think you may need money, start building this defensive position now. Don't wait until the day after you tell your boss that you're leaving to start doing this, because the market is responding very quickly now to various news items. So
and it's volatile, yeah.
Right, these things can happen.
So when you say do that, you preserve it, you put it in maybe some money market funds, that type thing?
Yeah, and it doesn't mean go to all cash. It just means maybe look at the stocks that you own. If you're taking a bunch of risk, maybe on a bunch of high-flying technology stocks that don't pay any dividends, maybe look to tone that down and put your money on some proven winners, companies that generate a lot of free cash flow year in, year out, that pay dividends. Dividends are oftentimes a great indicator of the health of a company, because that means that they have a bunch of profits that they can share with their investors.
You're talking about companies that are well known, that people should know about.
Proven winners.
Safe way to be safe. What's your final word there? I think we have about 30 seconds here.
Well, I just say have realistic return expectations. We've had a great 12 to 15 year run where the market has been going up 12, 14% on average every single year. I would not personally expect that same sort of return over the next 10. We're probably going to have just a little bit of a bumpier ride based on valuations of the market. I'm not telling people to panic or anything. I'm just saying that is about 20 to 30% higher than the long-term historical average.
Okay.
So don't base your retirement plan off, hey, I'm going to get 12 to 14% compounding returns for the next 10 years.
Be more realistic. All right, Marshall Clay from the Welch Group gave us a lot to think about this morning. We'll be right back.
Wish there